Is an analyst at CFC Seymour. Good morning to you, Stephen. Clearly some significant reactions we're seeing on the markets today, but what I want to do is start by asking you our question of the day, something we will put to the viewers. Do you think that in the United States there is a need for an emergency rate cut from the Federal Reserve before, in fact, the September meeting? We know that the markets are currently pricing in a rate cut from the Fed. When do you think that will happen?
I don't see an emergency rate cut, but we do see a rate cut sometime in the fourth quarter. I think that the situation today is a lot different than other situations when they have done emergency rate cuts. We're dealing with situations where we're dealing with subprime mortgage companies defaulting, such as Rams Loan, but where, in 1998 we're dealing with countries such as Russia defaulting. So there's a major difference here, and also we're not seeing terrorists flying into planes or flying their planes into buildings and such like that. So fundamentally, I think that that the Fed will stick to their guns, and we saw that in Poole's statement yesterday that the subprime situation has not yet impacted fundamentals, and I think they'll continue that until September. So we don't expect to see an emergency rate cut.
Stephen, talking about the rate cut now, there is some train of thought now that even if the Fed does cut rates, as you say, possibly in the fourth quarter, it may now be more than 0.25%, in fact 0.5% by the end of the year or before the end of the year in the next three meetings that the Fed has. What sort of size of a cut would you expect in the fourth quarter?
I think we'll look for, nothing too major. I think we'll look for 1/4 point, maybe in October. And there's one more meeting in December. So at most we'll see 50 basis points cut, but we don't expect to see anything further than that.
Stephen, the dollar, it's largely ignoring the economic numbers that we're seeing at the moment. In fact, it largely ignored the CPI numbers that came out of the United States overnight. Clearly, we're getting the housing numbers out tonight. Do you see that we may see a reaction in the currency markets to those numbers, especially if they are weaker than expected?
I don't think we'll see too much emphasis on the data. I think we'll see a continuing situation to what we've seen over the past week and a half here, and that is overall on the market news with individual companies reporting their subprime losses. So I think that the data will sort of be put to the side a little bit here, but look for continuing strength in the dollar as the continuing sell-off continues, and overall we see this happening for a little bit more time here, and then we look for reversal and the carry trade to continue here.
Well, let's move on to that and take a look at what the yen's doing. In fact, it dropped below the 116.5 level rather just this morning at 116.4, I think it is, around about now. Now, how closely are you monitoring this currency, the yen, to see just how bad things are getting?
Well, yeah, we're looking at it very closely, but we're focusing on the fundamentals, and we think that in the near term, yes, we have changed our forecast, but overall, in the long term, we have not changed our forecast, and we see the carry trade continuing. The carry trade is not a one-year phenomenon. It's been going on since the mid-90s here, so we look for it to continue. It basically, with the fact that the Bank of Japan will still have to take a long time to get the rates back up to normal, or what the rest of the world considers normal. So we do expect the Bank of Japan not to raise rates next week, but despite being in a deflationary period and being GDP coming in low earlier last week and machine orders coming in very, very low, we still expect to see the Bank of Japan to increase rates in September. But overall, the interest rate differentials will still be very strong from now and going into the next 6 months. So we do expect to see some reversal in the carry trade here, and there's quite a bit of optimism. I think right now, if you're sitting in Japan and you want to invest in some blue chip Australian companies right now, it's a very good opportunity to do that. So we look for some positive news here.
So you still see some buying opportunities there then?
Very much so, very much so.
Mm-hmm. Yes. Now, if we take a look at what's happened to the Kiwi dollar overnight, it's taken a battering. Where do you see the levels of support when it comes to the Kiwi dollar?
Yeah, very good question, and we're looking at that right now, and I think the 70 is a very strong level right now. And what we're seeing in the Kiwi is a situation of what we saw last May when the Kiwi was the currency that fell off the strongest, but what we saw is that it continued to gain there as the yields were very strong there. And what we could see with the low New Zealand dollar is inflationary pressures may step back into the market much stronger than we expected as import prices will increase. So that could bring back higher inflation, which could bring back rate hikes back to the table here. So monetary policy has not really changed drastically here from a global perspective, but with these lower currencies, we have to reevaluate inflation outlook, and with import inflation rising across the board, we could see some changes in monetary policy here.
Stephen, staying with that theme, I guess, looking at what's happening to the Aussie dollar at the moment, of course, we do have the RBA Governor, Glenn Stevens, speaking to Parliament tomorrow. Do you think we're going to hear any sort of changes in his views, or do you think we will see Glenn Stevens retaining his tightening bias in Australia?
Well, I think we will see a continued hawkish bias, vigilance on inflation, because we saw that earlier this week when the central bank issued that in 2008 they expect inflation to reach the upper end of the target at 3%. So with those inflation expectations, we do look for an RBA rate hike in the first quarter. They'll delay it till after the election, but look for an interest rate hike in the first quarter for the Aussie dollar. Will rebound on that speculation as well.
So the Aussie dollar clearly being impacted at the moment by some of this hedge fund liquidation that we're seeing, but you think that the downside is relatively limited?
I do think so. As I started off, we're talking about Rams home. We're not talking about Russia. We're not talking about some major macroeconomic fundamentals here. And I agree with William Poole yesterday, yet. We're not dealing with it yet. So we have to focus on the fundamentals. So focusing on the fundamentals, we do see a reversal of the carry trade. So I think there's some great buying opportunities right now. And if you're sitting in Japan, you might look for some great opportunities.
Stephen, thank you for joining us this morning.
Thank you.
That was Stephen Rolls of CFC Seymour.